My second question is around the trade management. Your system is very adaptable to different market situations. Therefore, surprising me that you not have different selling strategies for weak bull markets or sideways markets, scale outs. I can imagine that in such environments, there will be a lot of frustrations in the sense that by the time a position is build prices pull up, deeply taking us out, why would you not accommodate for such situations? Well, I try as much as possible. I want to sell into strength personally, but I also want to give stocks time to breathe. So it goes back to, and it's a very good question, but it goes back to what I'm trying to capture here. So look at all this frustration of 2022. All year has been risk management, put on a position, make a little bit. Okay, then stop that as something else. Yeah, there's a lot that could have worked out, but and we could have captured some more out of it, but there was never really any sizable trends anyways. But it's very easy in this business to kind of slowly fall into a very short-term trading regimen. And the problem is, and just in my experience, is if you fall into that, the big moves happen, they don't look back, and that was your chance and you blew it. So my focus is really singular, kind of like, if you can look at the military, you can be a jack of all trades, but the best sniper is the best sniper, or the best fighter pilot flies fighter jets. He doesn't also fly, other types of military aircraft. He flies fighter, he's a fighter pilot. So you want to be the best at what you want to find. So when that right condition comes, you're not selling for a quick 7% profit because you think it's a bad environment. I mean, like, the environment is still poor. Just like in 1990, the environment was poor. You had the Gulf War where, Saddam Hussein invaded Kuwait, and together, I believe, between Iraq and Kuwait's oil reserves, he was going to control 25 to 30% of the world's proven oil reserve, which is huge under, just one Middle Eastern, I guess you can call unfriendly dictatorship. And so oil is spiking, inflation's over 6%, US economy's in a recession, market bottoms, Zoom goes right back up to all-time highs. And that leg, if you're positioned properly, like I spoke about recently with the gold market in 2016 and the other experience, or COVID 2020, if you're positioned right at that start of that leg, and that leg is in the start when things are still poor, that's where you make a killing. That's where the big money comes in. And so if you're just kind of always just reacting to what the market's most recently done, you're never going to catch that trend change. And that trend change is exactly what the whole system is trying to catch in the first place. So it's frustrating. To me, it's a necessary frustration to stay focused, completely on a singular goal and to fully capture that. So depends which frustration you want to pick. Is the frustration giving away a lot of small winners, or the frustration of when conditions are really right, you didn't double or triple your account? So it's a personal choice. And so for someone who chooses to kind of follow what we're doing here, and there's all these nice buys, which a lot of them work so well, so there's not a lot of follow through. If you want to sell much quicker into strength, you'll definitely have a more regular stream of profits. But then there's going to be a period where, I'll use 2020, but 2020 was abnormal. Like other periods, like I mentioned, 2016 with the gold market, or just stocks in general, 2010, 2013. When the turn comes and you're not positioned or you took your profits quickly, well, it's very difficult to get that positioning after again. So that's why. It's not that I don't have ways to sell. It's just that I don't want to choke off a trade in the first week or first week and a half, because sometimes those trades start a little slow, then the market conditions improve and they go vertical, and then it's very hard to reposition in what is the best quality merchandise in the market. So it's because what my goal, it'd be almost like, you're designing a Formula One car and you say, look, if you put better tires on it and a different suspension, you could drive it on the regular road on the weekends, and you could take it around, and you wouldn't need your regular car if you have your Formula One car. But then after, when it's time for race day, that different suspension, those different tires are going to make you lose the race. And that's where all the big money is. That's where all the sponsors are. And so what's important to get that weekday drive, or is it to come in first at Formula One weekend? So that's my mindset. That's how I approach it. But the tools are there, and the tools have been built up from years of kind of day swing trading. So they're definitely amenable to what your goals are. But I went to kind of a deep discussion here because it's a really logical question to have, and one that I had for many years. And I think when you miss enough of these huge movers, which is the case for me, that eventually say, look, you know what? It's very, very difficult to be able to pivot. How many super successful investors, Stanley Druckenmiller, Bill O'Neill, Paul Tudor Jones, how many of these guys trade multiple strategies, go long, short, and do different time frames. Everyone has their specialty. I mean, for a guy like Bill O'Neill, which we all know, he follows something similar to this realm here. A guy like Paul Tudor Jones does global macro. He's not global macro one day, and the next day he's a fixed income specialist, and another day he's just a small cap equity specialist. No, he's a global macro trader, and he becomes kick ass at what he does. And same with Stanley Druckenmiller. He has his approach, and he's not swing trading one day to make a bit of extra income. He's singularly focused on what he's trying to do. So same with some of the great bond traders. Like they're singularly focused on what they do, and they don't say, "Hey, let's just trade some equity because the bond market's quiet." So that's my overall perspective.